Hi, everyone, and welcome to Machine Dreams. This is the show where the people building AI talk honestly about what's working. There's a lot of things working, but there's a lot of things not working as well. So they talk about that. And what's next? My name is Kolawole Samuel Adebayo. I am a technology analyst and a Forbes columnist, and I'm joined by my remarkable co-hosts.
Hi, everyone. I'm Leah Stern. I'm a global communication strategist and venture capitalist. Hey, Sam, how are you doing?
Very good. I'm very, very excited.
It is. I'm thankful. So thank you everyone for
Absolutely.
joining.
Absolutely.
Today, we're actually joined by a former colleague and friend of mine. His name is Guy Dassa, and he's an investment partner at OurCrowd, Israel's most active VC, and he heads their AI portfolio. He sits as a board observer and investor for many AI companies, including Ori, DID, One AI, and more. Welcome, Guy, to Machine Dreams.
Thank you, Leah. Happy always, to speak with you and to chat with you. And
We're happy to
great
have
meeting
you.
you, Sam.
Same here, Guy. I'm sure it's going to be a great conversation. So before we get into what we want to talk about today, because there's a lot to talk about and unpack, we're talking about money and funding in the AI space. But before we talk about the funding and all the madness that is happening in the market right now, let's start with you. What's something interesting people might not know about your journey into investing and AI as a whole?
Couple of words about my background. I would say I'm not your typical, probably a VC, person. I'm by education, I'm a lawyer and accountant, but, I spent many years actually in traditional industries. I spent some years in the Far East, some years in Europe, all around traditional industries. And then I came back to Israel about 15 years ago. And then I more or less joined the VC community. I took some advantage of my past background in the Far East. We've tried from Israel to adopt models in Israel. In Israel, there's a chief scientist with, many different models driving what is known to be the startup nation. And so we've tried to adopt certain models to the Far East. Some were successful, some a bit more challenging. But then about 15 years ago, I've joined this landscape and I've been there since then. And, I'm very passionate about it. I love what I'm doing. And I think that's the key. If you love what you're doing and you have passion, then you'll enjoy and you'll do good.
You have really dived deep into the AI space. You lead one of the most active AI investment portfolios in Israel. What is the biggest misconception people still have about AI investing in 2025 and going into 2026?
I think maybe a good point to touch on is I think the discussions that people have today around the AI bubble. Everyone talks these days about AI bubble. Not sure if it's a misconception, but to me, if you look at other previous, revolutions, the industrial revolution, and, you can discuss about the trains and the factories and electricity and whatever. So I think, and people discuss also the dot-com bubble, right? So I think you can't really, I wouldn't compare the current situation to the dot-com bubble. I believe that AI is here to stay. I believe humanity, the demand, the need for AI will only grow. And, we can discuss the different layers. People speak about the different layers, foundational layers, infrastructure. You go above, there's the large language models. You go above, there's the orchestration layer, call it, and then there's the applications. So I think that infrastructure and the picks and shovels, these will remain. So, maybe NVIDIA will go through some changes, AMD coming, maybe some shifts from GPUs to TPUs, all sorts of different changes. But I think ultimately it's here to stay. Demand will only grow. We're all using AI daily, right? We're using ChatGPT, we're using Claude, we're using Gemini. 2 years ago, it wasn't like that, right? So we're all, consumers. And I think it's only going to grow also in consumer level enterprise level. So it's not going anywhere. Now you can debate, you can ask, okay, would that be an application, a winner application? Maybe that would be the winner application. But the core, the infrastructure, the picks and shovels, that's here to stay.
It's interesting that you just spoke about AI bubble because that's something I'm very, very curious about, especially with the conversation right now in the industry about round tripping and when it comes to investments and what has been described as the lupification of AI, where big tech companies are sort of like moving money across this sort of cycle where money is going from point A back to B and back to C and back to A. And it's sort of like is inflating the size of the market in an unhealthy fashion. So what I really want to ask is, what do you think about the idea or the concept of round tripping? And does this tie into the general conversation about AI bubble?
Well, people talk about this now. It becomes now a news, a hype. But let me tell you, it's not something new. I mean, the
So
two
round
biggest,
tripping is not new.
not new at all. Think about the two main players, ChatGPT and Anthropic, right? The two main LLM players. And, there's sort of, until now, there were sort of camps. So Microsoft supported OpenAI, Anthropic supported by Google and Amazon. So each of these had his own, call it circular economy. They support each other. Their investment is actually in return to, usage. So Google, Amazon invested in Anthropic, and part of the investment is in kind, right? It's not in pure cash. It's because they need to use it. They need to use the funds in order to consume from Google or Amazon. So it's not new, and the same from Microsoft. But people now sort of identify it, and because that's the way, there's news, there's hype, that's the way it floats now. But it's not something that's new. And, I would ask myself, whether there's something real behind it, whether these relationships are real or it's artificial. And, my feeling is, yes, it's real because Anthropic does need to use, the resources from AWS and from Google. So it is real. And you should ask yourself whether the valuation is inflated. And if the valuation is set not necessarily by these investors, and again, taking Anthropic, for example, we invested in Anthropic about a year and a half ago or about 2 years ago, not directly through other, SPV, and we can talk about it as well. But at the time, the price was set by external, it's always the question with VC. Who sets the valuation? Who sets the price for the round? And so if you have external validation, and that was the case with Menlo leading then the investment and, putting a considerable amount of money. So if you have a VC that's leading the round and pricing it, to me, it adds validation. And, you should always ask yourself if the fundamentals are real, if there's something behind it, or is it a bubble? And talking about the Anthropic, I believe that, the adoption, the growth, it's only growing in here to stay.
Guy, for our listeners at home who are thinking, well, how do I invest in the next Anthropic, OpenAI, Grok? How does an individual investor get in on these deals before they go public?
Listen, I can sell OurCrowd for this purpose because OurCrowd, our model, we're democratizing VC. So, call it retail investors, it's hard for them. They can't invest directly into VCs, or the typical retail investors wouldn't have like 5 million, 10 million, $15 million check. So one way is to get access through a platform like OurCrowd. And, I think we did great with these investments, at least in the last 18 months. And I can name, a few great investments and returns. Another way for them is to get access through secondary platforms, which are becoming more and more popular in the markets these days. So platforms like Forge, EquityZen, these would be secondary platforms. So if you're an early employee. You have common shares, and company allows you to sell your share. You need to go through a process. There are hurdles there. You don't have a VC like OurCrowd doing the diligence for you, but you have access. You can go and try to buy there, and if all goes well, you're able to have access to some early shares.
You recently said that 2025 has been a breakthrough year at OurCrowd. So is this something specific to OurCrowd, or something that you're seeing in the general industry? Because there are some critics that will disagree with you about that statement, generally speaking, about AI being a breakthrough year, 2025 being a breakthrough year for AI.
I'm saying it's being a breakthrough year for OurCrowd because we're starting to see the fruits, of the bets that we made. And so, yes, I think, again, if you made the right bets, and these can be either, really the top leading companies, and there is some anomaly in the market from VC perspective, because typically if you bet on later stage companies, growth stage, pre-IPO, you would expect returns, you would say, okay, there's a risk reward. You'll get like maybe 2x, 2-3 years, you'll get like 2x. It's maybe a nice, good return, safe bet. And you'd say, okay, earlier stages, I'll wait a bit longer. There's a risk. Maybe out of 10 companies, that I invest in, maybe 2, 3, 4 would do good. And you will have like on these companies, you'll have a return of maybe 10, 15, hopefully 20. And this will be rewards, compensating for the others. But what happened actually is that if you've put the right bets on later stage growth companies, they performed better, both in short time. So both in terms of return multiple and also in terms of IRR, because it's coming, really in a short period. And again, a good example is Anthropic. We came in when it was 17 billion. It was, the last round was 183. So do the math. And, there's discussions now about 350. So it's an anomaly. The return on such, you'd say, okay, it's a safe bet and I'm happy if it makes 2-3x, not 10-15. Right? So, yeah.
Israel has about, 2,000 AI startups? Does that sound right to you? So what makes the ecosystem unique? And is Israel really on par with what's going on in Silicon Valley and in the US? How does the US and Israel compare in that regard?
So, in Israel, there's lots of talent and people move fast and, early and to create innovation, adopt innovation. So there's lots of, action, around these spaces. At the same time, part of the AI industry, and referring more to what I, mentioned before, AI infrastructure, going to the foundational layer, to the LLMs, these are all extremely capital intensive. And, I wouldn't bet on the next LLM to come out of Israel. Even if there are talks of companies like Descartes or others,
Mm-hmm.
I don't expect that Israel can produce the next OpenAI or Anthropic. But on the application layers, on companies that are supporting, providing maybe parts of the critical parts of the technology that would support these giants, yes. And, we have the best example of Mellanox being bought by NVIDIA, right? So I wouldn't expect that, the next NVIDIA would come from Israel, but yes, next Mellanox that, would drive NVIDIA's success, yes.
So, but I think what I'm really curious about, and this might take you back to what you said about, the idea of round tripping and how this has always been here. And this is more of companies partnering together for a common, goal. Do you think, because this is a conversation right now, that some of those relationships will get frazzled very quickly as we move on? And because there've been reports about companies like OpenAI, for instance, starting to make commitments towards using Google's CPUs as opposed to NVIDIA's, right? And so we're starting to see some sort of crack. Do you think that we might be seeing a frazzled relationship in that cycle or circle of frenemies?
It's always been there, the case of frenemies. And NVIDIA, tried to, while at the same time, while it provides, resources and GPUs to its so-called rivals, because they're also, developing their own technologies. I think that's part of the ecosystem and as we make progress, the market becomes more and more sophisticated and advanced. So, it's like any other, early days, you have maybe this, the balance between these hyperscalers and maybe smaller, companies, all trying to find their exact place in the, in this ecosystem. But as we progress and the markets become more and more sophisticated, I would expect, it to be again a sophisticated market that is dictated by market forces.
For companies that are looking to get funded, and I believe you probably vet hundreds of companies a month, maybe a bit less, but for companies that are looking for funding, what do you, any advice or suggestions you have? Because I know you very quickly can look at a company and know if it's going to be able to be funded or not, if it will succeed. So what is like the secret sauce, the perfect formula for an AI startup to get money?
First of all, it all depends right on the stage. For different stages, you'd have different focus. At least, from my perspective as investors, I would look for different things. If it's early, very early stage, your bet is mostly on the founders, right? You need to identify a founder whom you believe in, even if the tech is not 100% validated, even if the tech is validated, but they don't have yet, the product market fit. They don't have the sales. So it depends on the stage. Earlier stages, again, it's mostly a bet on the founders. Some would say, okay, I like repeating founders, someone who already did it before and has the experience. That's one, typecast. Others would say, I mostly want to understand the passion. What's the level of passion? Is this the project of his life? Is this something, that he's 100% committed? Does he know the market environment? You're having this conversation with the founder and you get a feeling and understanding of, his level of engagement, passion, understanding of the market. So that would be in early stages. In later stages, you like to see how a company evolves from a certain level. For example, they'd have already sales, but these days it's easier than in the past to get from 0 or 100K to 2, 3 million or 5 million. But then from 5 million or 10 million to jump to the next step, you need to make some change, because the earlier stage, the sales are mostly founder-led. He's the founder, he's speaking, he has the charisma, whatever. But as the company evolves, you need to be able to manage a team. You need to be able to onboard a team, successful, some good sales manager. And that's not an easy phase, right? And often talking about Israeli companies, they would like to establish themselves a presence at the US. And then, the easiest pitfall is, okay, I'll hire a nice, suit in the US. He's able to speak or whatever, but you find yourself spending hundreds or millions without getting the results. So you need to be able to navigate this phase from early stage, seed A to B to growth. And so that would be one thing. The other thing I think, and maybe talking about, relates a bit to the AI bubble, SaaS companies, they're under threat these days because, you can develop, there's vibe coding and you can develop lots of things quite easily. And so traditional SaaS companies they worked on solution, they used to have a sort of a moat. And now it's maybe easily replaced by some, a group of young developers or even one person. And so they do need to be able to have their core strength, be that the IP, data mode, distribution channels, or whatever that, would hold and keep them just justify their position.
Hmm. I mean, curious about what you said regarding vibe coding. Do you think we're going to be seeing more of those one man companies going forward? Because I'm sure that you know about Base 44, which was purchased by Wix for I think about $80 million, and it was just essentially a one man company. Although there's concerns also about the dangers of products that are vibe coded. But do you think that's a trend we're going to see
Yes,
going forward? And are you going to
yes,
be
yes.
investing in those kind of things? Are we going to be seeing investors investing there?
I don't know if you're going to see investors investing there because it's moved so fast, and you have a few other examples. It's not necessarily a company that's been bought after a few months. There was also maybe not a similar, but somehow resembling example of three developers who developed a product they developed a certain product, and then they were offered to join Monday, and for big salary, big bonus, and just Monday just bought them in, and they were just I don't know, 2 months on the road. So it's easy, it's fairly easy without a lot of resources, with some vibe coding to develop a tech that can be attractive for big companies rather than innovating in-house, developing. If you're able to grab it for a few millions and maybe 20 million, 40, 60, whatever, compared to the resources that they would invest along, time, it's worth the while.
Well, Guy, we're going to wrap up, but we have one last question for you. If you could tell us a company that you're really excited about and what it does, that we should keep an eye out for.
I think you know it. You're familiar with Ori. I love Ori. So, I
Great
believe...
company here in the UK.
Yeah. I believe I'm a great believer in the company. I think the CEO is hands-on, is on it, and I think that they have something going, and I hope they'll do good. So keep an eye on them.
Yeah, so guys, Guy is very excited about that company. So maybe keep an eye out for that particular company. We never know.
It's called Ori AI, ORI, and you should check it out.
Yeah.
Yep.
Guy, this was fantastic. Thank you so much for going deeper than the usual investor talk. This was really very real, and we appreciate you for joining us today.
Pleasure. My pleasure, and good luck going forward.
Thank you, Guy, and thank you, everyone, for listening to Machine Dreams. We'll have more conversations with people shaping the future of AI next time.